morning and good afternoon again, ladies and gentlemen. It is 11 o'clock Nigerian time, and I guess that it's afternoon, evening, across Africa, Asia, and parts of the world. My name is Dave, and I'm pleased and highly honored to be your anchor today. We are making event, the first in the series of the webinars organized by the Committee of E-Business Industry Heads in Nigeria, being organized by Intermark. Ladies and gentlemen, the subject that we're going to consider today is managing risk and fraud in the digital financial services space. Without wasting much time, I think it is okay for us to kick off and start a program in earnest. Now, I would like to confirm that that's very good. So you all can hear me very, very loud and clear. That's fantastic. Ladies and gentlemen, in order for us to start this epoch-making event, we would like to call on the chairman of the Committee of E-Business Industry Heads in Nigeria, Mr. Adeyemi Atanda, to give us the welcome address. Mr. Adeyemi, please, over to you.
Good morning, everybody. Good morning, industry leaders. My name is Adeyemi Atanda. I'm the chairman of the Committee of E-Business Industry Heads in Nigeria. And I want to especially welcome everyone. So essentially today we have on this call with me a set of panelists that have been drawn from across the globe that are, we'll be discussing in a few minutes this particular topic. I will want to encourage us to make it as interactive as possible. Let's make it very engaging. Let's put in our very best in terms of making this a very rewarding time. At the end of this event, we'll be rising up with some kind of communique that will form the basis of engagement for further policy formulation and also engaging the customers a lot more. In closing, I would like to say that this is the first in our series of webinars. Please be on the lookout for more over the next couple of months. I wish us a very fruitful deliberation as we begin this event. Thank you very much. I hand back over to David to continue the moderation. Thank you.
Thank you very much, Adeyemi, for that wonderful welcome address. Indeed, ladies and gentlemen, digital has just become the driver of the new normal. And indeed, any business that is not digital is not likely to survive in this day and age. So thank you very much. Now, ladies and gentlemen, we'll be moving straight into the next item on our agenda today, which is the opening remarks by a distinguished speaker. Now, to give us our opening remarks is the Group MD of Access Bank PLC, and is also the chairman of the Committee of Bank CEOs, the person of Dr. Herbert Wigwe. Initially, he had promised and committed to be here himself, but incidentally, today is Bankers Committee, and as chairman of the Committee of Bank CEOs, he has to be with the Central Bank to attend the Bankers Committee. So he's unable to make it today, but he has recorded his opening remarks. So in a few moments, we'll take the opening remarks from Dr. Herbert Wigwe, GMD of Access Bank PLC. Now, I believe also that our lead speaker, who is also a director, and indeed he's the Director of Payments System Management Department of the Central Bank of Nigeria, Mr. Musa Jimo, is also at the Bankers Committee meeting, and he has also sent us his own lead speech for today's program. So what we're going to do is we're going to take both messages at the same time, i.e., the opening remarks from our special guest, the Group MD of Access Bank PLC, as well as the lead speech by the Director, Payments System Management Department of the Central Bank of Nigeria. We apologize for that slight technical glitch. So ladies and gentlemen, at this point in time, we're going to move straight ahead to goodwill messages. And now we're going to take our first goodwill message from Mr. Stanley Jacob. Stanley Jacob, I believe you are here on the call. Is that correct?
Dr.
Yes, I can see him smiling. That's good.
Yeah, good morning.
Yes, please go ahead.
So, good morning, everyone. On behalf of the CBS School, I must appreciate everyone for participating in this webinar. It's such a huge turnout, and we are excited about this. I wanted to say or start by saying that we are in very uncommon times, and we are learning new ways to work and live our lives. These times also came with its own challenges. The period of COVID that we are still in, it has its own challenges. My colleagues in the industry, other industry practitioners, we are all faced with the unique challenge of delivering the best in class and inclusive digital financial services to everyone at the lowest cost ever. This kind of have put some pressure on our finances, on our profitability, and we are doing our best to navigate it as an industry. There is an eruption in e-commerce owing to the COVID lockdown and shutdown of businesses. And of course, this has attracted an corresponding increase in cybercrime, cyber fraud, which I believe is part of the key topic we are talking about today. We believe that this requires an equivalent response, both in terms of financial literacy, because now we are seeing more people from the bottom of the pyramid participating in one form of e-commerce or the other. We need to be for financial literacy and also ensure infrastructure improvement. My charge to my colleagues in CB this morning is that we should and we must continue to support new consumption habits being formed by our users and the citizens of this country. And we must continue to rapidly innovate around these new needs. I have no doubt at all that the ESCO, led by Mr. Yemi Atanda, I see his video is off now, is highly dynamic. They are the best to lead us through these times at this time. Permit me to call them the lockdown ESCO because they came in during the lockdown and they have been very, very innovative in doing much more. I also thank you, Dr. David. Thanks to our special guests. We are waiting for the videos to come up, the director and other speakers. Thanks to everyone. We have quite a number of people on this call. We appreciate you all. And my message to you is to relax and enjoy the sessions ahead. Let's have a good time. Thank you very much.
Thank you very much, Stanley Jacob. By the way, like I mentioned, Stanley is the immediate past chairman of CB and is a member of the advisory council. Thank you very much, Stanley, for that excellent goodwill message. Yes, indeed, digital is the way forward. And with COVID-19, it is practically impossible for any business to survive without being digital. But coming with the digital technological innovation is an area where people also want to do things that are not so good. And that is actually the bedrock of the formation of CB. The overriding philosophy of CB is to ensure that whilst customers receive good customer experience, excellent service whenever and wherever they are, they should be able to do it in a safe and secure manner, irrespective of the fact that you have fraudsters parading the place and trying to cause problems. On this note, ladies and gentlemen, we'll move straight ahead to our keynote address The keynote address today is going to be taken by somebody who is located somewhere in Africa, all the way from Nairobi in Kenya. And her name is Nancy Kiari. Nancy is the head digital financial services fraud group of Microsave Africa. So we'd like to hear from Nancy today as she gives us our key address. Nancy, over to you, please. Thank you.
Thank you, David. Thank you, Juan. So just to begin, I'll request David to share my presentation. I prepared a small presentation for this session. So again, thank you everyone for the privilege to attend this webinar and to share learnings on managing DFS risk and fraud with other industry experts as well as the attendees on the webinar. So for this session, as my other colleagues have mentioned, we'll be focusing on understanding the current context of risk and fraud in DFS and how various DFS ecosystem stakeholders can manage risk and fraud. We will also briefly touch on DFS risks and fraud during the COVID-19 pandemic. So as has been mentioned by various speakers before me, in recent times, we've seen many financial service providers pursuing digital transformation to facilitate the provision of digital financial services. These have been instrumental in building inclusive societies, addressing inequalities in access to financial services, and this is especially the case in emerging countries. So electronic or digital platforms generally offers the opportunity to rapidly scale up access to financial services using digital tools such as mobile phones, retail point of sales, as well as other accessible access channels. Financial service providers, however, are constantly faced with a growing threat of fraud, which is becoming more complex and more sophisticated as DFS grows in many emerging markets. As a consequence, many digital financial service providers are not actually realizing the full benefits of digital financial services. And this risk and fraud has actually contributed to a weakened business case for providers. So this means that this discussion is actually very important for us because we need to find a way to actually achieve a balance between enabling financial innovation and addressing provider and consumer risks in offering digital financial services. Because this will be key to enabling, to encouraging the uptake and continued usage of digital financial services. So to move on quickly, we'll quickly discuss the opportunities that are brought in by various stakeholders within the digital financial services ecosystem through the roles that they play within in providing digital financial services. So to begin with, we'll speak about the regulators who provide frameworks of operations for digital financial service providers, which potentially introduce gaps for risk and fraud. They also provide oversight of provider activities, which includes identifying trends that are useful to manage the occurrence of risk and fraud. So they also play a very important role in incentivizing and sanctioning DFS providers, which introduces a risk in that depending on how stringent these terms are, this could potentially introduce a risk of discouraging the availability of digital financial services. So also the absence of appropriate regulatory regimes and supervisory oversight can create opportunities for fraud. When it comes to the providers, different provider roles will generally include handling consumer data as well as direct and indirect interaction with consumers. Introduction of third parties reduces the level of controls that providers will usually have on the level of service. So this comes in through the agents, when they have external service centers where they're using external or contracted employees. These responsibilities, if not effectively handled, could introduce opportunities for risk and fraud into the system through the different digital channels. When it comes to the consumers, in many cases, the nature of customers itself that providers will deal with in these emerging markets is in itself a risk. Illiterate or semi-literate customers may experience challenges interacting with digital channels. These customers may also lack experience with formal financial services and digital tools, which places them at a higher risk of fraud. Usually, these customers will require assistance to transact with digital financial services, and these third-party interactions or consequent need to get assistance could introduce risk in their transaction activity. So moving on into understanding the role of the regulator in managing risk and fraud. So generally, providers will give us a framework for KYC requirements. So generally, they'll tell us these are the identity documents that we require to onboard customers. the multiplicity of identity documents or the lack of clear guidelines on the documents that are acceptable for financial transactions could introduce risk. The more documents that we have, the higher the probability of fraudulent reproduction of the identity documents. When it comes to interoperability, limited interoperability could sometimes lead to customers being surcharged for cross-network transactions. I'm sure many of us have seen this. When you transact with one provider and then you need to send money to a different provider, the charges will be very high. So for the segments that we deal with, the likelihood of customers getting discouraged by the prices and the complications of trying to transact across networks could become complicated. When it comes to connectivity, we are all aware, we've all tried a transaction once or twice, and for some reason, either we did not complete the transaction or we completed the transaction and it had to reverse. This in itself is a risk because it reduces the confidence that we have in using these financial services. So generally, unreliable infrastructure and systems, this could introduce a risk through failed transactions and potential financial loss, which could lead to a loss of trust in digital channels. So when it comes to data protection, of course, inadequate regulatory checks on how DFS providers are using personal data could in itself be a risk, in that we introduce the risk of data abuse, we introduce the opportunity for cybercrimes, and of course, overregulation and enforcement can itself lead to product withdrawal by providers. If providers feel that the regulation is too stringent, then the compliance costs are too high, then the likelihood of them withdrawing digital financial products is going to be higher, which reduces the choice and may result in forced exclusion of some segments of customers, particularly the most vulnerable. So we've seen examples of data mishandling among providers in various markets. For instance, in India, we saw Airtel Payments Bank penalized for the unauthorized use of customer data, where they used the existing customer data to open bank accounts for customers through which digital government payments were to be processed. So the Reserve Bank, of course, penalized them, and this is where the role of the providers, of the regulators really comes in. When it comes to consumer awareness, customers will generally exhibit more trust in regulator communication, and I'm sure a number of providers will agree with me here. Hence, we need to emphasize the role of the regulator in enhancing the levels of awareness, in enhancing the level of awareness in digital financial services. Because the more customers know of their rights and responsibilities in using DFS, the lower the likelihood of them being defrauded when using these digital financial services. And moving on to the role of providers. So generally, we know many providers across markets are currently pursuing digital transformation because the new in thing now is digital financial services. However, as we've mentioned before, there is risk in this. But as much as there is risk in pursuing digital transformation to offer these services, the opportunities will generally far outweigh the risks, of which operational risk and fraud usually has the least impact compared to all the other potential risks and loss of income. This means that in spite of the potential for introducing operational risk through digital financial services, we cannot slow down on innovation. Risks such as channel downtime, shortages of staff, especially skilled staff, which I know many providers will have to deal with as they transform digitally. This can probably be managed through proper planning and implementation of adequate support functionality. Moving on to the role of customers. So various customer interactions with DFS will generally introduce risk as customers interact with the digital channels, as they interact with the digital tools, and as they interact with the third parties that are usually assigned by providers. So customers will experience multiple risks in using DFS depending on their individual social and cultural circumstances. For instance, in some societies, say for instance, Afghanistan and some countries in Asia, women are relegated to stay home. So whenever they need to use financial services, they will usually need to be accompanied by a man or require the assistance of a man to transact. So in such cases, the women will usually struggle to keep their account details secret. So this will include mobile wallets, mobile wallet pins, the balances in their accounts, and these gaps. Additionally, these gaps in things like phone ownership will also introduce risk. This is because if a woman has to borrow a phone from the man in the family, she will probably likely have to share her PIN, or she will have to share the balance of her account. In this way, introducing risk to the customer when they are using digital financial services. When it comes to the user interfaces, so we've all had to use an app, a digital financial services app, where we are not able to tell the functionality, we cannot find the specific functions that we need. And in this way, this can compound the opportunity, the potential of transaction errors, which could also enhance the risk of loss for customers. Additionally, unfamiliar fees and terms for using DFS complicates and could potentially discourage them from using digital channels to access financial services. So this is usually most common, even with a basic a cash deposit, or if you want to do a cash transfer, or you're trying to access credit. The lack of clarity in the terms and conditions that providers have set puts our customers at risk. So what does this mean? What do we need to do? So what can DFS providers do? So the first thing that they need to do is to automate monitoring and screening systems. So this needs to be supported by a very effective support functions on the back end, which will be able to adequately identify any issues that are occurring, identify trends in fraud, and adequately address this as soon as they occur. Then, of course, we need to ensure continued compliance, monitoring, and implementation of controls and sanctions. We must also review and analyze specific product risk and integrate mitigants. So for the products that we offer, we need to look through the entire product journey to identify loopholes. And once we identify these loopholes, we need to make sure that we put in place actions or corrective measures that help our customers to better interact with the system and reduce the risk of loss for us as the provider. So for example, in Tanzania, they had, I'm sure many of us have heard of this SIM swap fraud. So for example, in Tanzania, they put in place a measure where a quarantine period. So once you change your SIM to a new SIM, when you want to get a new SIM, then there's a period through which you cannot access the mobile money within the account. So if you're registered for mobile money, you can't access it immediately after you change your SIM. So in this way, the cases of fraud through SIM swap have reduced. And this is purely because they understood the context of the market, they understood the specific product, and they were able to put in place corrective measures for that specific fraud challenge. Then, of course, we need to put in place effective complaints and grievance redressal mechanisms. So we always say that you cannot adequately eliminate fraud and risk in banking, not just in digital financial services, but even in traditional banking. And the only way we can we can try and sort of address these challenges that we have is by putting in place effective complaints and grievance redressal mechanisms to ensure that any complaints are dealt with as quickly as possible. So for example, Safaricom in Kenya, I'm sure many of you have heard of Safaricom. It has introduced a very effective and very quick identify the what was the last transaction you did, what was the value of the transaction, who did you send money to. So customers don't have to go through that whole process. All they need to do is use their voice IVR in the phone, and through this identify themselves through a phrase. So one simply says, at Safaricom, my voice is my password. And immediately you're authenticated. The identity of the customer is authenticated. And you can quickly raise whatever issue you have, and then it can be addressed. Then, of course, we need to speak about engagement and coordination with other providers and regulators for shared learnings. Risk and fraud does not affect one provider. So whenever there's risk and fraud in a market, this affects all DFS providers within the market. So it's very important that we are continuously learning from each other, that we are continuously learning and sharing occurrences of fraud so that we can all learn from it. Then what always comes up is the comprehensive sensitization of customers, the sensitization of employees, and the sensitization of partners. And the reason why I'm not focusing on customers alone is because any of these three could either be the perpetrators or the receivers of fraud. So employees can perpetuate it, customers can perpetuate it, and our business partners can also perpetuate it. So what do policymakers need to do? So for policymakers, appropriate legislation that makes mitigatory controls mandatory, and of course puts in place strong internal structures to enforce implementation by providers is absolutely necessary. So we need to focus on the creation of an ecosystem where providers and regulators work together to create an enabling DFS ecosystem. So for example, in Uganda, a platform has been put in place where DFS providers can share details of fraudulent agents. And through this, any provider who's trying to recruit an agent is able to tell that this specific agent previously committed fraud, and hence I do not want him on my network. And in this way, it has been very effective at reducing the number of fraudulent activities on agents' networks. Then, of course, the policymakers must also put in place risk assessment tools, which will be key to identifying trends in risk and fraud, and of course, take immediate corrective measures. So generally, sometimes you will find that regulators are not adequately staffed or adequately trained to ensure that they can investigate and work with law enforcement agencies to adequately manage cases of fraud. So it's very important that we equip and train the functions of the various regulators across the country in managing DFS. So now we'll quickly move on to what is affecting everyone in the globe at this point, which is COVID-19. And as I'm sure many of us have seen, many governments, many development partners are rapidly responding to the impact of COVID by encouraging cashless transactions. So while there is pressure to act fast, diverse factors, for example, gender must be considered as we promote these digital transactions. We need to be very careful not to exacerbate the digital divide. We need to be careful about financial losses that our new users may face in using digital financial services. And of course, we need to be very careful about how vulnerable these new users are going to be to fraud cases. So I'm sure we've heard of many users who are newly using digital financial services, even the old users. Many of us have faced scam alerts, phishing messages that generally try to steal money from the customer. So for a customer who has not used digital financial services, they are at higher risk of being defrauded. So we need to be very careful even as we adapt digital financial transactions for this period. So what can we do to make sure that we are not at risk? So the key things that we need to put in place is we need to mitigate and manage disruptions to internal operations within provider institutions. So this means making sure that we have effective support structures. So we have the staff necessary, we have put in place corrective hours, operational hours, to ensure that at all times customers can access the institution when they're using digital financial services. We're all aware digital financial services are not 8 to 5, like the normal working hours. So we need to make sure if a customer is transacting digitally at 10 p.m. and they experience an issue, then they should be able to receive assistance. Then we also need to ensure that we are mitigating the negative impact on availability of DFS. This means we ensure availability of DFS at all times to ensuring system uptime, of course, supporting agents. So agents have been very instrumental in facilitating digital transactions during this period. So how do we support our agents to continue to support our customers? We need to make sure that they are aware of how they can protect themselves from contracting COVID. We also need to make sure that they have sufficient liquidity, and when they need to rebalance that, there are structures in place to support them in managing their liquidity. Then, of course, we need to enable greater usage of digital payments. This COVID-19 has had a positive effect of providing us with a forced push into digital transactions, even for many governments that had not, that were not really enforcing this. So what do we need to do to ensure digital transactions continue? So we need to put in place effective customer protection measures. We need to make it easy for customers to transact digitally. For example, in Kyrgyzstan, we've seen regulators allowing remote identification of customers through video calls with banking staff. So if a customer wants to open an account, they simply contact the branch or they contact the bank through the customer care, and a branch staff is going to contact them and conduct an interview through video and authenticate the identity of the customer through video. And through that, a customer is registered and is able to transact digitally. Then what else do we need to do? So we need to enhance public communication and outreach, and this needs to be a shared responsibility of regulators and providers, as well as other ecosystem stakeholders. So it cannot be left just to the regulators and the providers. Development partners needs to come in, governments need to come in. We need to all put in our efforts to ensure that anyone who's using digital financial services is aware of their rights and responsibilities, and they're aware of how they can use these services. So for example, the Reserve Bank of India recently released, and actually yesterday released a new legislation on financial literacy efforts, which are aimed at enhancing financial digital literacy. So the mechanisms, the program that they are using has focused on the development of comic books, the development of e-learning videos, the use of text messages, which are all targeted at building the level of awareness among the customers that are using digital financial services, and even for those who have never used digital financial services. So unless our customers are aware and unless we make sure that our customers are protected as we use digital financial services, then we will not experience the growth that we expect from this period. And the opportunities to further progress in digital financial transactions is massive. So for us to do this, we need to be very careful at managing risk and fraud and making sure that our customers have a good experience in using digital financial transactions. And I think with that, I'll end my presentation and welcome any questions. Thank you.
Thank you very much, Nancy, for that very insightful presentation. Ladies and gentlemen, I'm sure we'll all agree that this keynote address by Nancy, who is sitting all the way in Nairobi in Kenya, is quite insightful. It covers almost the entire gamut of issues surrounding, and I dare say the entire gamut of issues surrounding the DFS space, from provision of services, innovation, new technologies, operators in that space, as well as the regulators and the customers, and then the key issues that each one of them faces, and the key responsibilities, all the way to ensuring that services that are provided are easily accessible to the average customer. But there is a key point there that she made, which is that these same channels now become a conduit for fraud. And so I took very good note of a point where she also said the whole overarching concern is to ensure that there's a balancing between service provisioning and risk management, which is fantastic. Thank you very much, Nancy, for that wonderful keynote address. So ladies and gentlemen, at this point in time, we'll move straight to our panelists. CeBIH, working very closely with Intermark, have assembled a team of experts, and I dare say a team of international experts, covers, and other allied areas. So at this point in time, I'd like to introduce very briefly our panelists. The first person we have today is Mr. Oluseun Odeku. Oluseun is with the financial services arm of KPMG. That's KPMG Professional Services. And he's a financial services risk analyst. So Seun, you are welcome. Following from that is Mr. Beulah Adeoye. Beulah Adeoye is the risk advisory partner, West Africa of Deloitte. I'm sure everyone here has heard of Deloitte. So we have KPMG on the one hand, and we have Deloitte on the other hand. What a lethal combination. And then the third person on our panel today is Mr. Yinka Tiamiyu. Yinka Tiamiyu is the chairman of the Association of Chief Audit Executives of Banks in Nigeria. And he's also currently a general manager at Access Bank PLC. Also on the panel today is Mr. Abumere Ibua. Abumere Ibua is the chairman of the Committee of Chief Information Security Officers of Nigerian Financial Institutions. And Abumere works with Stanbic IBTC. Next on our panel is Barrister Obasi Nwabweze. He's a cybersecurity lawyer and is a principal partner of Primus Barristers and Solicitors. So he's here today and he will give us a legal angle to cybersecurity as much as possible. And last but not the least, ladies and gentlemen, is Mr. Rashid Mohammed. Rashid Mohammed is certified digital finance practitioner and convener. And he also is based in Bangladesh with the Digital Finance Forum. So he's the convener as well as the forum organizer in Bangladesh. He works for the government. Practically, he's had a lot of years in the FIU, and he'll be talking to us about that as well. So ladies and gentlemen, you can, yes, good morning. So you can see, ladies and gentlemen, that we've assembled today to look at the subject of managing risk and fraud in the digital financial services space, a team of experts who are going to do that creditably well. So our distinguished panelists, I'd like to welcome all of you to the event today. First of all, I'd like to start with Mr. Oluseun Odeku. I'd like you to tell us in no more than 2-3 minutes what your views are, given all that we've heard from the keynote address, from the work that you do in the field, and the experience that you've gathered over time. We'd like to hear your views about this subject, please. Oluseun, over to you, please. Thank you.
Okay. Thank you very much. I think fraud in the digital financial services industry is a major issue. We recently conducted a survey, that's KPMG, and one of the top risks for the management of banks in the financial services industry is cybersecurity. If we look at our particular society, I think it's even more prevalent in terms of, if you look the way the digital systems are abused, people are defrauded. So it's a major issue for us in this country that we need to address. I think we need to pay a lot of attention to it, especially around consumer awareness, and then about ensuring that we have proper, secure payment channels, ensuring that we onboard proper third parties onto our payment platforms in the financial services industry. Thank you.
Thank you very much, Oluseun. That was very, very good and insightful. Next on my panel is Beulah Adeoye. Beulah, we would like to hear from you, please. What are your views? What are your thoughts on the subject that is being discussed today? Over to you, please.
Okay, so good morning, everyone. So the risks in digital financial services are myriad, and these risks actually exist on every level, from the customer to the bank itself to the country. And but of course, the notable ones include the technology risk, regulatory risk, operational risk, strategic risk. There's the fraud risk, but I think there's also the human interaction risk. So let me take an example, for instance, from the technology risk angle. Tools are developed to address different risks and vulnerabilities, and these tools tend to do their work very well. So take, for instance, if a financial institution experiences an event where a technology tool did not perform its function or did not perform its function well, what do? You can implement a patch that fixes that problem. However, when you're thinking of the human angle, which presents a major risk and is also a major problem, it's different. So thinking of human interaction with your systems, tools, and platforms as vulnerable, as a unique vulnerability in itself is probably what we should be thinking of. It is important to consider, for instance, what an employee can do to compromise your system if he has access, or what a customer can do to compromise his own account, or what a vendor can do to compromise your platform, whether intentionally or unintentionally. And these are unique risks. So what can we do? I'm sure we'll get into that much later, but as of today, as I'm speaking now, I'm not aware that there's any technological patch to fix human stupidity or human greed or human vulnerability. But I mean, as we speak on, there are other things.
All right. Thank you very much, Beulah Adeoye. That was very, very deep and insightful as well. And indeed, as Beulah was speaking, I was remembering a very old friend of mine, Dr. Donald Creasy, who propounded the fraud theory. So as he was speaking, at every corner, every point of the fraud triangle. At every point of that triangle, you'll see the different issues popping up there. So we'll go into more details about that when we go into the questions, actually, all right? So let's take thoughts from our third panelist, Mr. Yinka Tiamiyu. What are your thoughts, please, Mr. Yinka Tiamiyu, about this subject matter that we're discussing and all that we've heard, and based on your experience so far in the field? Please tell us. Thank you.
Good morning, everyone. Let me first thank Nancy for that insightful presentation. And I think she did a beautiful work in laying the background to what we'll be discussing today. Basically, the way I see the subject of discussion of today is the fact that for us in the financial services, we are in the business of taking risk, and so we cannot run away from risk, especially as we try as much as possible to make life more convenient for our customer, as much as possible, get them to do transactions from their bedroom. This can only be achieved through the digital channels. And, so it comes with the associated risk. So, like what Nancy said, is for us to have a critical balance between the financial services and innovation and how to manage the fraud that it comes from what we are trying to do. Basically, you see three major types of fraud. The first one is what we can call identity risk, the operational risk, and lack of customers' awareness. This comes in various shapes and forms. Cyber attack, like the last speaker said, phishing, smishing, bitcoins, scams, bank loan card fraud, credit card scheme, and so they come in various shapes and forms. And so the work for a bank is like for each product, you have to ensure that you go through what I will say, as you are developing each of the products, building controls along the line and ensure that you minimize the risk of fraud losses. Thank you.
All right, thank you very much, Mr. Yinka Tiamiyu. That was very useful, also very deep and insightful. Ladies and gentlemen, I understand that our technical crew have been able to overcome the little challenge that we had earlier on with regard to the voice of the messages from our special guests and other guest speakers. So what we're going to do right now is we're going to take a little break and move to hear those messages, and then we'll continue with our panelists. I believe that is okay. So if that is fine, please, our technical crew, please, can we hear the first message from our special guest, the person of Dr. Herbert Wigwe, the current GMD of Access Bank PLC and Chairman Committee of Bank CEOs. Let's have his opening remarks and the special message, please. Thank you.
Mr. Chairman, distinguished speakers, panelists and moderator, our dear attendees, all protocols duly observed. I'm delighted to address you today, and there is absolutely no doubt that the year 2020 has been an extremely interesting one. With this pandemic, we have come to appreciate the importance of the little things which we have often overlooked in the past. One thing is certain: our ability to collectively share ideas and forge a new direction, a common goal, or a common solution to a besetting issue cannot be reined in. The digitization of the financial services ecosystem is a phenomenon that has come to stay, whether we like it or not. The only reaction we have is to evolve with the changes that it has triggered. The recent pandemic has, of course, again, intensified the urgency of using fintech to keep financial systems functioning and keep people safe during this time of physical distancing, of falling demand, reduced input supply, tightening of credit conditions, and of course, rising uncertainty. At the same time, these new technologies must be designed and implemented carefully to manage the risks so we do not worsen the challenges that have been posed by this crisis. This is certainly the unspoken commitment that the theme of our webinar, which is managing risk and fraud in digital financial services, enables. Risk is literally a part of our lives now and in every action we take towards promoting digital financial services. We must ensure that the safety of our customers' funds and the integrity of our institution remains our ultimate priority. Through electronic banking, we've been able to transform the Nigerian financial landscape. At Access Bank, we have always found innovative ways of using mobile technology to serve customers better through our digital banking and lending platforms. We've invested heavily in leading Nigeria's banking evolution, forming a partnership with the African FinTech Foundry, which is basically set up to nurture the next generation of innovative financial services firms. As a Pan-African accelerator, the African FinTech Foundry is designed to find and invest in startups that adopt a global outlook while still focusing on our continent, Africa. Through our Access Closer initiative, we have also been able to extend our digital financial services to the unbanked through bespoke banking agents who are now more accessible to customers, provide services to their specific needs in their communities in which they basically operate. Our popular USSD code, which is the *901#, makes it possible for anyone, anywhere, to access financial services using their mobile phone. If Nigeria is to achieve its targeted financial inclusion rate of 80% by the end of the year, certainly more solutions like this will need to be introduced. As we continue to enhance services and develop industry, there are, however, some blatant challenges that banks face, more specifically in developing economies. As a case study, the prevailing issues stalling the growth of digital financial services in Nigeria include, firstly, the low levels of formal financial services. In this case, I'm speaking about cash dominance in transactions, about informal credits that exist, and of course, different local types of saving methods. The second is that we have lower income and financial literacy levels. Again, you see it in low values of transactions, in small fees, and the need for user education. Thirdly, there's underdeveloped technology and venture capital ecosystems. And in this case, we're talking more in terms of skill manpower, and in terms of finance entrepreneurs, of course, small markets and limited revenue potential that currently exist. Fourthly, there are relatively weak infrastructure. So the payment systems are still underdeveloped, and there's consumer credit, limited consumer credit data. Legal enforcement is an issue, particularly when you have default in payment obligations. Power is also an issue. The telecoms and internet coverage remains a big drawback. So while all stakeholders, and I'm talking about private entities and government, continue to make up for these deficiencies, it is expedient to ensure that these investments are continuously reinforced with the relevant legal and regulatory frameworks that can allow for most people to benefit from the digital financial services and ensure a competitive ecosystem. Therefore, while opening up new vistas of opportunity, We have to remain aware of those that seek to impact our objectives or fraudulently take advantage of the ubiquity of service delivery, and therefore risk management and innovative technologies are the critical tools that we must invest in to enable us to mitigate all of this and control our ecosystem. With the numerous benefits that have been early identified, also comes the pool of risks that the digital terrain adds to the existing risk landscape associated with traditional banking. Mitigating these risks requires the right policy to drive all players in the financial ecosystem, i.e., the customers, the providers of funds, the enablers, and of course, most importantly, our regulators. Organizations must effectively manage risks and fraud in digital financial services by articulating policies and implementing the relevant controls that will address the inherent associated challenges. In order for us to successfully mitigate these threats, especially during these peculiar times, we must, as a starting point, set the risk appetite for the organization. The second is that we must understand the threat landscape. Thirdly, we have to create an optimal cyber security strategy. Fourthly, it's not just for you to do it alone, but there has to be an industry-wide cybersecurity awareness and education. Security awareness requires continuous effort because the threat landscape is continuously evolving. However, it remains up to us to protect our customers, our industry, and most importantly, our country. I'm positive that this session will bear very many learnings and charts new path for the industry as we learn to manage risk and fraud in digital financial services. Please enjoy the webinar. Thank you very much once again.
Thank you very much, the Group MD of Access Bank PLC and the Chairman of the Committee of Bank CEOs in Nigeria. Ladies and gentlemen, I'm sure you will all agree with me that that speech is not just excellent, not just very deep, but extremely insightful. It's full of insights. Our special guest, Dr. Wigwe, started off by saying that risk is part of our lives. Therefore, safety and security of all the systems and customers' transactions are sacrosanct. And then he went on to elaborate more about how collaboration among key stakeholders is critical. Digitization, since it is here to stay, every organization must adapt. And so there's a need to use fintech to further accelerate the gains that are bound in digital services space, and that new technologies must be designed and managed appropriately. Even went on to talk about, alliances, African FinTech Foundry, and so on and so forth, and then meeting the needs of even the unbanked, especially via the use of the USSD. Our special guest did not stop, but he went on to also outline some of the issues that are stalling the growth of DFS in Nigeria today, including too much cash in the environment. And once he mentioned that, I shook my head. A lot of Nigerians still want to hold on to cash, which is not very good. And the central bank is also tackling that as well. And then the issue of high illiteracy levels, low revenues, weak infrastructures, etc. So, ladies and gentlemen, the conclusion by the special guest today is that organizations must ensure that risk management is done appropriately with the right policies encompassing all the different groups, consumers, providers, regulators, and so on and so forth. So thank you very much, sir. Wonderful presentation, excellent message. I believe that the organizers of the forum will pass on the appreciation of the Committee of Electronic Banking Heads in Nigeria to our special guests today for that wonderful message. Thank you very much. At this point in time, ladies and gentlemen, we'll go straight away to the next address by the Director of Payment System Management, Department of the Central Bank of Nigeria, Mr. Musa Jimo. So can we take that message, please?
Good morning, ladies and gentlemen. I'd like to respect the existing protocol that has been laid at the beginning of this event. So thank you, the Chairman CB and all the members of CB for putting this together. For me, this is the best time that we need to have this kind of discussion, managing risk and fraud in the digital financial space. It's actually the right time because of some of the issues that have cropped up in this pandemic. I like to also thank those that will be speaking today in advance, because I've seen the topic that have been laid out for discussion, and these are topics that are very, very germane, and Central Bank has interest, in what the outcome of these discussions would be. So the panelists, I'd like to thank you for taking your time to have this discussion on these topics today. First, let me say that this pandemic has actually, exposed us to a lot of potentials that we were actually sitting on and we never explored. It was during this COVID-19 era that some of us actually put our business continuity plan to test, whereby a lot of people were not coming to the office. You couldn't go out as we used to. So manning the existing technology infrastructure was very difficult. And so what we have seen is, can we actually operate our payment system if we do not have physical access to where we have our installations? And I think so we have actually tested our failover processes, our business continuity plans, basically to see how resilient our infrastructure and how ready we are to respond to failure and continue to exist 24/7. So for me, it's a very good experience that this had actually happened. It has also brought to bear a lot of new technologies. Everybody is talking about contactless payment, because right now nobody wants to have physical interaction with acquiring devices. Everybody is being careful with touching objects that are deployed in public places. So QR code, near field communication technology, all that, and transaction tokenization has actually wrapped up because everybody is providing such services. That's what the customers, actually are asking for now. So the entire 2020 had actually brought about a lot of business opportunity for us. But we need to bear in mind that this also comes with risk. So we need to dimension the risks that contactless payment have also brought to bear, which is why I really like the idea that we are having this discussion to have a 360-degree view of the various initiatives that are coming up and how we can curtail the incidences of risk and frauds that may crystallize when customers, use these services. I also need to bring your attention to some of the regulations that border on data privacy. We have the Nigerian Data Privacy Law, and you also have the GDPR of the UE. And so we need to be very aware of this, because this may actually impact on your businesses. So regulation has actually gone beyond, every borderline. It is no longer about Nigeria, because your services can be provided in Nigeria and it's being given to someone that is outside of Nigeria. So we have to be very mindful of the fact that there are jurisdictional, regulations that will impact on your businesses in Nigeria. So I also want us to have a look at that and the risk that this brings to bear. But with all these, like I said, the fraudsters actually follow the technology. They see, where the technology is going, and they try to explore all the weaknesses and vulnerabilities in those technologies. So let's make sure that we have a 360-degree view of the existing payment infrastructure and some of the new initiatives that the non-bank service providers, the fintech industries are actually bringing to bear. And I think we are all bracing up. I want to imagine that all of you have woken up to the reality that fintechs, fintech companies are going to inch into your pie. It's no longer going to be your business as usual. You have technology companies that are providing services and trying to compete with you. Central Bank is coming with a lot of initiative that would support and create an environment where there can be proper conduct between all the various operators and participants. So the regulatory sandbox is it's okay. The open banking concept is also being discussed, and a lot of other initiatives that at the end of the day, it will help us to advance our payment system beyond the shore of Nigeria. So I thank you very much for having this, and I'll be awaiting the discussions that the various panel discussants. I've gone through the list of the panel discussants, and I call them the industry eggheads. So I know that they're going to do justice to this discussion, and hoping that at the end of the day, there will be a communique from CB to Central Bank, basically suggesting and outlining some of the areas that they think we can intervene and work together, as a team. Thank you very much for inviting me, and I wish you guys very good deliberation this morning. Thank you.
Thank you very much, sir. Thank you very much, Mr. Musa Jimoh. Ladies and gentlemen, I'm sure we all agree again that from the regulator's perspective, Musa Jimoh has laid out the key issues covering the subject of managing risk and fraud in digital financial services. It covered even the key problems and the benefits of the pandemic. And one key benefit of the pandemic is that it has enabled practically all players in the field to test the resilience of their systems, working from home, etc. And of course, there's now even increased focus on contactless technologies, like the QR code, like some banks have been pioneering the environment, like EcoBank, for instance, and other banks that push the QR code. This is the time to actually focus on it because, like the director said, no one wants to start touching things that other people have touched that you don't know because of the risk of COVID-19 infection. And he made mention of the fact that risk management is critical to balance the benefits. And then he introduced some other regulations, especially relating to data privacy, like the NDPR that was championed by NITDA for the Nigerian environment. And then there is the GDPR for the European environment. The key point he raised there was that regulations now transcend geographies. That's very critical, and it's something that all key operators in this space need to take note of. And then one point that was raised, which I believe we all took note of, is the fact that the fraudsters follow the technology. The fraudsters are monitoring very closely, and they're taking steps to see how they can game the system. And so we cannot just go to bed and sleep with our two eyes closed. And then he mentioned other initiatives like the regulatory sandbox, open banking concept, and so on and so forth. Thank you very much, Mr. Musa Jimoh. That was a very, very, very good speech by the director. So at this point in time, ladies and gentlemen, we'll take the last message, which is a goodwill message from Ronke Kuye, who is a pioneer chairman and member advisory council of CeBIH. So please, let's have the message, please. Thank you.
Good morning, community of e-business industry heads. I'm happy to be part of this great group and to have been there at the beginning. Well done for the great work you have been doing in the e-business industry. Today's topic is also an important one: managing risk and fraud in the digital financial services space. To drive people to digital banking, it is important for your customers to know that their money is safe and that they can transact securely. Therefore, one cannot underestimate the importance of educating the public at large on the risks associated with digital banking. The best and the quickest way, no doubt, of serving customers is via the e-channels. It is therefore imperative that the banks take adequate steps internally as well as collectively to protect their systems in order to promote confidence and trust. Now, who better to promote this collectively than CeBIH? Congratulations, Yemi, on being the chairman, and I have no doubt that you will contribute to the progress of CeBIH and the e-business industry as a whole. Well done, CeBIH. Keep the flag flying, and I wish you a good deliberation and a successful webinar. Thank you.
Mr. Chairman.
Thank you very much, Mrs. Ronke Kuye. Excellent message, quite sharp and short and straight to the point. She did mention, at least for those who listen, that all customers need to have confidence in the system. Customers need to know that their funds are safe. That's critical. And that ties in with the philosophy of CeBIH, which is to ensure that even though we are talking about technological innovations, we're talking about new services that can wow the customers, we must ensure that we take note of the risk that is posed with the bad guys who lurk around underneath trying to game the system. And so she rounded up by saying that banks must take steps to address these issues and to collaborate. That is critical. There's need for collaboration. It's not something that any one bank or any one institution can do on its own. So thank you very much for that excellent goodwill message by Ronke Kuye. So at this point in time, gentlemen and ladies, we'll come back to our panelists. So distinguished panelists, we've heard it all again, and we have seen that the DFS providers or the service providers are not expected to be avid risk avoiders. No, they got to manage risk and to stay profitable. So now let's hear from Mr. Igboa Abumere. What are your thoughts about the key types of risks that are facing banks and other financial services providers today? And given what you know, your experience, what you've heard, what are your major views, please? In about 3 minutes. Thank you.
All right, thank you, and good morning, colleagues on the line. I'm happy to be part of this great event. So I would quickly talk to the questions being asked. So there's a couple of risk issues when it comes to payment systems. We talked about technology risk, we talked about fraud, cyber, and the likes. But when we go into the real details, what really leads to this? One, it's the fact that we lack a proper system for identity verification and validation of citizens that want to adopt some of the financial services that are being driven through digital means. We talk about the lack of financial literacy or even awareness on some of the concerns or major risks that impact the financial services. How do we deal these issues? We've seen situations also where we talk about third-party, fourth-party risk. And these are, we've heard from the chairman of the Bankers Committee, where he talked about the needs for us to collaborate with fintechs. Yes, collaboration is highly required and needed in difficult times like this to help promote innovation, to help also strengthen the trust and confidence that the consumers or customers have on the payment ecosystem. However, we also need to be aware and more conscious on the integration points that we establish to be able to grow this, to be able to deliver on this mandate. So it brings into point the fact that we cannot protect ourselves alone. We need everybody to be on the same page when it comes to ensuring the right level of protection across the payments ecosystem. And that's why it's an ecosystem. It's a combination of players within that space, and everybody has to be aligned. We need to be guided by frameworks and standards. We need to ensure that we maintain minimum security requirements to be able to play effectively on that space. And we need to have appropriate risk management programs detailing the roles and responsibilities of the various stakeholders within the ecosystem, so that clearly gives sets the right tone and also gives the right guidance in ensuring that we protect that ecosystem, or we protect the ultimate customer at the end of the day. Thank you.
All right, thank you very much, Ibua Abumere. Now, we'd like to hear from the lawyer in our midst regarding the subject that we are discussing today. So, Mr. Obasi Nwambweze, let's hear from you, please, in just about 3 minutes. We can't hear you. You are muted. Unmute yourself.
Oh, sorry.
Good.
Good afternoon, everyone. Thank you, Doc. Okay, I just wanted to draw attention to the fact that judging by everything that has been said previously, from Nancy to Herbert to everyone that has spoken down, that there will be crime. There will be, in this particular case, cyber crime. But what steps do we take then to ensure either the progressive reduction in the frequency and or the mitigation of the effects? Insufficient at the moment. Retooling.
Hello.
And then when we speak about hello. Can you still hear me?
Can you hear me?
Yes, I can hear you. I can hear you.
Please continue. We can hear you.
We cannot hear you properly. You were breaking off. So you may need to repeat what you have said.
Yes, I'm trying to say, I was saying that crimes must happen, especially cybercrime in this particular case. The steps we take, the steps that we must take in order to reduce the frequency and or to mitigate the effects thereof are the focus areas that I'm mostly interested in. We have to worry about insufficient laws and a legal system that requires plenty of retooling to catch up to the rate and the methods that have been applied in this particular area of crime. And then, as I've been mentioned severally, with particular interest to the victimology of cybercrime, what role the victim plays in ensuring the success of the crime committed against him or her or institution. You know, that's where the institutions come in, the digital financial services providers, to worry about the security, the personnel, and then the collaboration between and betwixt themselves and with the justice system, criminal and civil, to see that offenders actually get punished. This is very critical in my view. If we work the law, put it more to practice, test it, use it, and people can see actually and remember, everybody can recall and remember actual examples of people who did cybercrime and who actually went to jail. It will help a lot to reduce the incidences and to keep the cyber criminals at bay. Thank you.
All right, thank you very much, Obasi Nwambweze. Last but not the least, ladies and gentlemen, we'd like to hear from our panelists all the way from Bangladesh. Rashid Mohammed, I would like you to tell us in about 3 minutes about the key risks that banks and other financial services providers are facing and what your views are, given what you know and your experience in the field. Over to you, please, Rashid.
Thank you, David. Thanks, Nancy, for the nice presentation. In case of digital financial service, we see that the existing player are providing new services as well as the new non-bank player also coming in this space. Traditionally, we know that banks are better in risk management because of the banking practices. But when we see the new players are coming, the risk management, sometimes we see that not that up to the mark, but we have to work with them and also to understand them their business process, because when new services is coming, there is diversified of services, and understanding the risk business is very important in from the point of view of the regulators. Then put the regulation and supervision in place is very much important. And in terms of existing players, we see that the new services, mobile payment or cards are adopting a new, banks are adopting new service, and there is also mobile wallet and other service, and as well as the payment service operator who provide the gateways. So the risk level are different for different services. So when we go to the risk management or AML safety risk management, so we have to understand and assess the risk of the provider, and then we have to place the regulation properly. Because when if we do not provide appropriate risk or proportional risk measures for the provider, then the innovation will not happen. So understanding risk is very important, as well as the continuous collaboration, discussion with the service provider is very important in this space. Because what I said, that many of the services are very new to the service, new to the regulators. So thank you. This is the new scenario which regulator are now facing, and they should the services are evolving, risks are evolving. So continuous dialogue with the stakeholders is very much important for all in the ecosystem. Thank you.
Okay, Rashid, thank you very much. Indeed, the services are evolving, the technologies are changing, the risks are also evolving. And so where does that leave us? That sets the stage, ladies and gentlemen, for the next round of questions and answers that we're going to pose to our panelists for further in-depth discussion. So I'll go Mr. Lushku, our participant from KPMG. Now, talking about new technologies and innovation, we have seen that in the digital financial services space, a lot of what is happening is driven by innovation and new technologies. And we've also heard from all our previous speakers that these new systems and technologies also come with vulnerabilities that fraudsters can actually exploit. Now, what's the question? The question is, what steps can organizations take specifically to curb the fraud risk attributable to the implementation of new technologies? What can organizations do? Olusegun Odeku, please, over to you.
Okay, thank you very much. I think for organizations, as they adopt new technologies for digital financial services, they need to be sure that those technologies don't present vulnerabilities to their system. So there has to be proper risk assessment before that technology is actually onboarded. The bank and the financial institution needs to ensure that they've taken into consideration the regulatory demands for a technology of that nature. They've looked at the technology risk also. How does it integrate into our existing technology? A number of the technologies we see nowadays are coming from third parties who are plugging into banks' system through APIs. I think it's the responsibilities on banks to ensure that, you know, they not only ensure proper due diligence at the point of onboarding that tool to check for all possible vulnerabilities, but they also need to continuously monitor the interactions they have with, you know, those specific platforms through ongoing risk management. So I would think that before any tool at all is, any technology is implemented, the bank needs to be sure that, you know, they've addressed all the key risk areas. They have to do a test run of that tool before they onboard it. And, you know, like every technology, loopholes will come up as people use them. And the bank needs to make sure that they have in place processes where they can respond quickly to deal with all as they come up. Thank you.
Okay, thank you very much. Although I didn't quite hear the last part of what you said, Seun. Do you want to recap that last part? You broke off.
Okay, I think the last part is that as people use these technologies, you need to ensure that, you know, you have in place protocols that would enable you deal with loopholes that are emerging, because fraudsters always try to exploit these loopholes as these technologies are being used. So the bank also needs to be sure that they're on top of it. There's the threat, you know, one of the things we do is a threat assessment, where on a regular basis, we, you know, you in a controlled environment, you can have simulated attacks on some of the technologies that the banks are using to be sure that, you know, they don't, that there are no vulnerabilities. So they need to do that on an ongoing basis. And I think these technologies are two-sided. They can also, as they coming in to facilitate payment, some of these technologies also prevent fraud and secure the payment platforms better. Thank you.
Okay, thank you. Thank you very much. Now let's move on to the issue of certification to standards, 2FA, etc. Now I'd like I'd like Beulah Adeoye to speak to this point, please. Many organizations believe that their systems are safe and secure as long as they are certified to international standards, otherwise known as ISO standards, as well as PCI DSS. Meanwhile, industry watchers believe that this is just a mere fad. So, Beulah Adeoye, I'd like you to share your thoughts on this. What do you think about certification to standards? Does it mean that once an organization is ISO certified, it is therefore very secure? Or once an organization has 2FA, that means all security issues are taken care of? What are your views, please, Beulah? Thank you.
So thank you very much. So I'll start by saying that in all sincerity, certifications and standards like the ISO and the PCI DSS play a major role in securing an entity from threats. So most times, it is not just about being certified. Organizations need to practice those things that these certifications and standards provide. Of course, there's nothing like being 100% secure. So organizations have to take extra measures to seek out security consultations to enhance or bolster their security posture. Of course, two-factor authentication is great. Multi-factor authentication is great. It helps to prevent unwanted access from threat actors or people that want to carry out fraudulent acts. But it's not a silver bullet, and to say that it's a silver bullet that satisfies all security requirements will be an overstatement. We also need to realize, like I mentioned in my opening statement, that the human factor is the most crucial aspect of security. So take, for instance, a Twitter hack that happened recently for some high-profile individuals. They almost all had two-factor or multi-factor authentication, but this didn't prevent the situation of what happened. So beyond the certification, beyond the multi-factor authentication, cyber criminals still gained access to the internal tools that then give them admin privileges to this famous account. So yes, multi-factor authentication, two-factor authentication is important, but organizations have to look at the entire gamut of security infrastructure and components to keep them secure on a, in terms of vigilance and resilience and things of that nature. So those will be my comments on that point. Thank you.
Okay, thank you very much, Bula Adeoye. As Bula was speaking, I just gazed at a piece of paper on my desk here, which was picked from Twitter, actually. That was just about 2 days ago, where the CEO of a company, I don't want to mention the name, even though it is public knowledge, he stated very, very boldly on his Twitter handle, "We were not hacked. A clever criminal convinced us to give him our data." So this was a popular data breach that just occurred recently. And 23.4 million customers had their data taken by fraudsters. And the CEO wrote on his Twitter handle, "We were not hacked. Just a clever criminal who convinced us to carry our data and give to him." So on that note, I would like to move to Mr. Yinka Tiamiyu. And let us talk briefly about the concept of customer awareness. It is generally believed that enhanced customer awareness or enhanced user awareness will go a long way in mitigating risks. However, it has been observed that the users hardly read their messages, whether they are educated, illiterate, semi-illiterate, or whatever. The banks and other organizations keep providing the information to customers, but customers do not read them. So they still keep giving out their critical, highly prized jewels to the fraudsters, to the criminals. So in your view, sir, what is the best way to get customers to hear the message on fraud prevention that banks and other DFS organizations are passing on to them? What is the best way for them to hear it? Mr. Tiamiyu, please, over to you.
Thank you, David. The best way is to have what I can summarize as effective communication. What does it entail? Basically, the recipient, who are you targeting for that information? So if it is maybe below 30, you must do something that is probably on social media that is more of entertainment focus based, that we interest them, that they will even smile and, joke about, the so-called millennials and zillennials. Anything that you are doing that does not involve some form of entertainment, honestly, you will not be communicating effectively. The other thing is, like, you must also use the right language. It's not just a one-size-fits-all. Basically, what we need to do is to say, what are the, just like, take for instance, in Nigeria, after communicating in English, you have to also do it in broken English. Go to the various major languages and ensure that you also communicate. Now, the platform that you even communicate for those our native languages in Nigeria may be totally different. It might not be social media, because probably they don't even have access to the kind of internet that people in town will have. So you probably need to use radio to communicate. So in summary, this customer awareness is very important to us, in the sense that whether the bank bears the liability or the customer that bears the liability, the effect still comes on the bank. So for us as bank, we need to protect ourselves and protect our customer. Ensure that they are well aware of the latest technology, and probably also update their knowledge of the kind of frauds that are taking place now. Then ensure that those frauds are communicated to them effectively on the various platforms that is desirable. Thank you.
Thank you very much, Yinka. That was very good, very insightful, and very deep. Now we'll move on to a raging debate. There's a debate that has been raging around the place, which is on systems, people, and processes. I call it the huge debate. A lot of us believe that people are the biggest risk factor in the digital financial services space. Some others say it is the processes that the people follow. And some others say no, it is the technologies that actually are the bedrock of it. So if you have smart people, great processes, not so good technology, you're gonna have problems. So that debate keeps going on. So I'd like to hear from Igboa Abumere. What are your views on this raging debate, on this subject? What do you think? Is there one factor that organizations should focus on, or should they not focus on anything? Please, what do you think? We'd like to hear your views. Thank you.
All right, thank you, Doctor. So my view is the organizations need to take a holistic approach to managing risk associated with these three key areas. So when you talk about people, process, or technology, there's no one singular approach because the threats they're dynamic. You have threats that are more tailored to or target the human factor. You have threats that are process focused. You have threats that are technology focused. So taking a risk management approach is the most effective way of managing risk associated with the three key areas. So I would just speak to the previous bits we talked about the awareness, and I think when we have an awareness program that's in place, that awareness program would help address the people or education bit. That does not deal with the technology side. And the reason why I say this is because if we look at payments today, there's been a shift to mobile at the moment. Mobile is more predominant in driving financial services currently. Now, there were data in the past where one of the biggest challenge was the type of phones that come into the country. Some of those phones came in with malware pre-installed. They came in with various types of risk already. So having awareness in place also helps manage that associated risk with such devices. So I think it's a holistic approach. Risk management is key for organizations, but I think we need to even take a holistic approach to dealing with the problem. Because we talk about national security in much more advanced words, we need to also look at that from a Nigerian perspective, because that also could impact how the citizens also use financial services, because they could be potentially exposed even before they get on board any payment service. So we need to have a much more holistic view to dealing this from a people perspective, process and technology. Thank you.
All right, thank you very much, Igboa Abumere. Yeah, you're proposing a holistic approach towards handling or attacking the issues of process, of people, and systems. That's fine. From here, ladies and gentlemen, we move on to the legal space. So let's hear from Mr. Wambweze Obasi. We know that in Nigeria, there is a cybercrime law, which has been in effect since 2015. And it has different provisions covering different areas. What, in your view, should customers be aware of in that law and begin to comply with fully? Put differently, are there behaviors that people exhibit today, customers, etc., that violate parts of the law? The second part of the question, so I'm going to give you two questions in one, is the key ways to combat fraud, especially e-fraud, in respect of collaboration with the operators, with regulators, law enforcement, international bodies, etc., etc. Do you think we are doing enough in Nigeria and in Africa and the rest of the world in this regard? So please, we'd like to hear your thoughts on this, please. Thank you. Hello, you are muted. Unmute yourself.
Okay, sorry.
Thank you.
Can you hear me now? Okay.
Yes.
Concerning the first question, the Cybersecurity Act of 2015 in Nigeria, which I believe is similar to other cybersecurity acts across the world, does focus on a lot of salient provisions that overlook or ignore, but which, because they are crimes now under this law, we need to pay attention to. I'll just mention a few. For institutions, usually when you make your annual reports and other finance-related publications, you might find some institutions leaving out some details just in order to manage the information and maybe affect positively the price of stock and what have you. It is now a crime under Section 13 and Section 14. The law goes further to say that to class this under computer-related forgery, computer-related fraud, keeping information that should be out there away from the public, releasing inauthentic information, and then releasing information that is only, you could say, only half-truths, which then lead others to take financial decisions that can cause them losses. An institution can get into a lot of trouble. A person, particularly on the desk where this is managed, can have themselves in jail for 3 years, or a 7 million naira fine, or both. Then Nancy had mentioned earlier about third-party interventions where there are gaps, where users of digital financial services have social or cultural or say illiteracy problems, and they then need someone else's intervention to help them use their cards or other digital financial service platforms. This creates room for fraud. Now, whoever takes advantage of these situations is also liable to various jail terms for identity theft, abuse of data related to a computer system, as variously provided in this law. I would also like to call our attention to the usual crimes that we are mostly aware of. Phishing here has 3 years, Section 32, or 1 million naira, or both. Spamming, the same, 3 years or 1 million naira, or both, Section 32 too. Spreading of a virus or malware, the same, 3 years or 1 million naira, or both. And then Section 33 deals with crimes relating to use and abuse, fraudulent use, especially of electronic cards. You know, your debit or credit cards, stealing them, using, cloning them, using the one that doesn't belong to you. And many times we do some of these things believing we're on the safe side, you know, using your spouse's card, and then getting to the ATM, finding some old man who maybe can't use the ATM himself, and then you step in. Remember that you're the one the video CCTV is seeing. If anything goes wrong there, you are the culprit. Going to your second question about collaboration and what can be done, or whether the industry is doing enough in collaborating to combat crime. I'd like to say that the industry is, well, doing its best, maybe, but certainly, in my view, not enough. There is, speaking of gaps, there is a huge gap, which, with all due respect, is due to functional illiteracy on the part of law enforcement officers and even judicial officers in terms of cyber security laws, their implementation. I would urge industry players to help plug this gap by providing and funding training and retraining of officers from the law enforcement agencies and judicial officers, to upgrade them, to upskill them around these areas of cybersecurity, law, awareness, and implementation. Like I said before, it is the actual history of people doing cybercrime and going to jail. That, to me, is the key to deterring those who are jumping right now into that bandwagon. You know, just as market is expanding for digital financial services, as has been noted, cyber criminals are rejoicing and jumping into, you know, to reap, you know, in quotes, as they usually do. So to close that gap, I think that if each of us can point to 1, 2, 3 persons, either in our institutions, in our neighborhood, we read in the papers or all over the social media where these guys are also always milling around. If we all have instances of people who actually went to jail because of cybercrime. Now, to make this happen, we need the institutions to collaborate with law enforcement agencies, not only for this training and upskilling of these officers, but also in terms of providing the evidence that is required in order to make for successful prosecution, for successful investigation and prosecution. Many times, financial institutions want to protect their image from the negative effects of a story coming out around breaches having occurred on their system, or their customers having lost money because of breaches, and so might reflect badly on the institution, and so they shut it down. Maybe they just send away the staff involved, and then they shut the door on investigation and prosecution. I want to all institutions to go the whole hog and actually see these guys put behind bars before you rest. It helps to keep the ones who are still not yet behind bars to maybe change their minds and find something better to do with their time. Yes, if you allow me to speak, I'll go further, but I think that should be that.
No, we're managing time. You can take 1 minute just to round up, 1 minute more to round up, all right? So
yes, all right.
Manage time properly.
There are various, I recall a recent instance a recent case that we were involved in. The bank simply stopped at saying to the customer, it must have been that somebody in your family or whoever has got hold of your PIN. And that was that. All the other requests that were made, you know, of course, this person withdrew this money from my account in your bank. There must be some detail. Where did they transfer the money to? Did they write a check? Where they were, when they moved the money, what bank they move it to? The bank was reluctant until we got a court order. I mean, you didn't have to wait for that. If the bank also knows that what goes round comes round, keeping this digital financial services space safe and secure is in the interest of the institution, in the interest of the customer, in the interest of the economy of Nigeria, then everybody should maybe see a little more collaboration coming from these institutions in terms of training and retraining of judicial service officers and law enforcement officers, please. And also in terms of collaborating in investigation and prosecution by providing evidence. Thank you.
All right, thank you very much, Mr. Obasiwambuze. Key points made there. Thank you very much. So let's move now to our international speaker, to one of our international speakers from Bangladesh. That's Mr. Rashid Mohammed. We would like him to give us, from the regulatory point of view, okay, what his views are. For instance, all these previous speakers that we heard, the key speakers that we heard mentioned that the regulators are a key participant in the digital financial services space. So may I ask you, Mr. Rashid, based on your experience in the AML, CFT side of things and supervision of DFS in Bangladesh from the FIU, I'd like you to tell us what your views are about this subject. That's one. And you may also speak about the challenges and trade-offs of DFS consumer protection in emerging economies. So you can take the two in one if you don't mind. Thank you.
Okay, thank you, David. Back in 2012, I want to share only the mobile financial service is the most popular digital financial service in Bangladesh. There is about 100 million customers right now, right this moment. And since 2012, mobile financial service becoming popular from the very beginning. And in the early stage, as a AML safety supervisor, we have we are struggling to understand the service. There was a rapid popularity of their services, but at the same time, as a central banker, new technological service, we do not understand these services because it's coming about a platform, is coming about other channels, USSD menu. So it was very new. At the same time, when we talk with about the service provider, we understand that they also don't understand the risk of their service they are providing, because that's very new and there is no study, there is no typology of the fraud and risk of mobile financial service. Then what we have taken the initiative. We first said the service provider to appoint a separate AML CFT compliance officer for banks, because many of the banks are operating are providing mobile financial service. And for the bank subsidiaries, the organization separate from the banks, we asked them to establish a separate AML CFT department as well as chief anti-money laundering compliance officer, because that organization is separate from the bank, so they should have separate risk management framework. And they also, we have instructed to develop a new policy and a separate policy or the part of the existing policy for mobile financial service, because it's entirely different from the banking service. As well as we also taken initiative to assess the risk of the mobile financial service, because it's using mobile technology, there is some inherent risk of the mobile money. And so we have formed a study, from a focus group with the different departments of the central bank, is financial inclusion, FIU, consumer protection departments, as well as the service provider and telecom regulators, and the police, Bangladesh police, because they also investigate the fraud cases of the mobile financial service. All them together, we study the how what kind of fraud is coming, what kind of how this fraud case is happening, who is responsible, where is the problem of the system process, and what's the lacking of the customer. And there is also problem of in terms of agents, because when you are deploying agents, you are inviting new risk. But in mobile financial service, it is essential part of the services. So we cannot ignore the contribution of the agent, as well as we have to understand the risk of the deploying the agents. So we developed a study paper on this. The title of the study paper is AML Safety for Mobile Money Policy Options for Bangladesh. You will find this paper in our website. So based on the risk, we identify the risk and which risk we can manage, because some risk we identify, but that risk cannot be managed right this moment, but you have to wait for some more days, because when there is USSD menu, when there is no data framework for fingerprint or facial recognition, you cannot deploy the technology for such kind of the, ID authentication or ID verification. So based on the study paper, the service provider also develop new policy or manual for mobile financial service separately. As well as we arrange extensive meeting and workshop with the service provider, with the other stakeholders, mainly police also, and also the consumer protection department of the central bank, because they receive the cases, as well as FIU also receive the suspicious transaction report and fraud related complaint. And based on our analysis, we develop some STR related indicators and typology also we develop and we discuss in our paper. And based on our indicators, the mobile financial service providers develop their data analytics to identify suspicious transaction and identify from millions of transactions, because it's manually impossible to identify suspicious transaction within mobile money manually. And also some providers established a separate unit which is 24/7 hour open and to deal with fraud cases. That is very much important, because when there is a fraud happen and the customer try to reach the customer care point of the service provider instantly, if we can block the transaction, then the money can be reversed. So the stopping the money right this moment is important. Instant confirmation of the transaction is very much important for mobile money, because in any post transaction or card transaction or MFS transaction, it is mandatory here to send SMS to the customer. And and in terms of consumer protection, we say the fraud prevention is very important, as well as the as well as the call center is very much important for digital financial service, because in traditional banks, the call center, we do not see efficient call center for many of the banks. But in new services who are providing mobile financial service or wallet service, we see that very efficient call service available for them. So these are very crucially important for mobile financial service. And for consumer protection, the consumer literacy is important, what we have discussed earlier, as well as the informing the customer about the services, about the fees, about the risk of the fraud is important. And there is several method of customer communication we have already discussed. There is cultural issue, there is also effective communication method. So that's all from my side. Thank you, David.
Okay, thank you very much, Rashid. Excellent contributions right there. At this point in time, ladies and gentlemen, we would like to take a few of the questions that we have under Q&A. During the course of the discussion so far, a lot of people have gone and put in some questions. I can see about 33 questions in the Q&A segment, which is very good. But running through all of them, because of the time that we have left, we have very little time right now. We are racing against time. We may not be able to take all of the questions in the order in which they were asked. However, what I have tried to do is to group the questions and bring out themes from the different questions. So from what I can see, the first theme there is about the telcos. There were quite a number of questions on telcos, i.e., what is the telco, what is the responsibility of telcos in helping to prevent fraud? And then even somebody asked where fraudsters have taken monies from customers' accounts and used such monies to buy airtime. How do we recover such monies that have been used to buy airtime? So I would like our panelists to comment on that first. So who would like to take that question first on telcos, responsibility of telcos in assisting to manage risk and prevent fraud, and then how we can get monies that have been stolen and used to buy airtime? So who wants to go first on that, please, amongst our distinguished panelists? Yes,
Sorry.
I can see Mr. Abumere. Yes, Abumere, over to you, please.
All right, thank you, Doc. I think the telcos play a significant role because one, we as banks run services to customers using their own infrastructure. And basically, when we talk about security or security of information, most times we say end-to-end security. So what happens between the customer and the bank? The customer needs to consume services. These services are delivered to the customer leveraging the telco's network. So there are a couple of risk issues around that. If that platform or that infrastructure is not safe or secured, then customers stand the risk of their transactions or information being tampered with or manipulated along the way. So it's very critical and crucial that when we deliver such services through telcos, we ensure that it's delivered in a secured manner. And I think in the past, when you look at the mandate for telcos, I think a lot of time they're focused on providing data services. But apparently in recent times, we know a few that are now verging into the financial and payment space. And as a result of that, that has also increased or heightened their responsibility in ensuring that that infrastructure is safe and is secured to conduct business and also deliver some of these services to the customers. I know the central bank and NCC have been playing a very collaborative role in trying to ensure that the payments ecosystem remains safe. I've attended a few seminars where we've discussed around how do we ensure we maintain confidence and trust by customers on the different platforms. So it's a gradual process, it's a maturing engagement. We can't get it to the desired state at the beginning, but I think at the level and point where we are, there's awareness, there are signs of collaboration between telcos and the financial system. And I think one of the key things also, which was a key risk we had discussed at that time, was the SIM swap risk and threats that we see on the financial space. And as a result of that, certain initiatives have been taken to ensure that banks enjoy such facility or service or capability to be able to make risk-based decisions when supporting customers on their financial services. So I think that's where I will leave it for now in terms of
Okay. Thank you. Thank you. Thank you very much, Ibu Abumere. Now, if Mr. Yinka Chamiyu is still on the call, I'd like you to speak to us briefly on, just in 30 seconds, the funds that are layered through telcos to buy airtime. Do customers have any recourse? Is there any way they can recover those kinds of funds? Yinka Chamiyu. Yes, please.
Yeah, I'm with you, Doctor. It's a difficult call because the telcos, they have actually provided service for the somebody that is buying the airtime. I think from the collaboration that we have seen from Central Bank and NCC, maybe they want to make it a requirement that, I mean, for somebody, just like the way we have a behavioral monitoring tool in our system, somebody that probably has never bought anything like 5,000 and is now buying airtime of 30,000 once, they need to probably have something in place like that. That will help a lot, but certainly more, and ensure that, I mean, we have a way to also monitor fraudulent guys that are also on telco's platform. Thank you.
Okay, thank you very much. Now for Olusegun Odeku, please, I would like you to comment in not more than 1 minute on a question that was raised regarding mitigating financial reporting frauds by DFS in terms of cybersecurity, securing the systems that are used for financial reporting. How do we ensure that the financial reporting by organizations is correct, is appropriate, and authentic? Not more than 1 minute, please.
Okay, thank you. I think for financial reporting fraud,
Yes.
If you look at that fraud typology in itself, it's usually a fraud that is executed by senior management and the executive. It's a very, very good picture. And they are the ones also who are really in charge of the controls. So it's usually dependent on, the auditors, the regulators who come to do ongoing supervision on a regular basis. And, once we have the auditors, if the auditors do a thorough job in most cases, even though their job is not to find fraud, but if they do a good test of the systems that support financial reporting, they should be able to identify where there are exceptions that throughout these things. And then even internally, I think a good whistleblowing platform is very, very necessary. Most people in the finance department of banks know when these things are happening. A lot of them may want to speak out, but they may feel threatened if they speak out. So if the regulators enforce a good whistleblowing platform where, people who don't want to be part of it speak out, that's also a good way to identify. And then we do ongoing data analytics when there are unusual trends in the financial statements of banks. I think it's also something that can help identify this. Thanks.
Thank you very much, Olusegun. Now, ladies and gentlemen, like I said earlier on, we may not be able to take all of the questions, but we'll just pick a few. I think there's just one more that I would like to mention before we move to the next item on the agenda, which is, there was a question here that was asked about digital currencies. Some of these frauds and risks, especially the frauds in the financial services area, involve purchasing of Bitcoin. So somebody is asking about a framework for digital currencies. Question is, I would like Beulah to please speak to this in no more than 1 minute. Is it desirable to have a framework for digital currencies in Nigeria? And what value do we think that can bring to ensure that risks and frauds within the DFS space are properly managed or managed better? So, Beulah, what are your views, please? In about 1 minute.
All right, thank you. So I think that the first thing to know is that if something is identified as a risk, ignoring that risk particularly when the risk is likely to crystallize, is not a good strategy at all. Okay, so cryptocurrency generally and the blockchain and its use cases has come to stay. So for those that are enthusiasts, you go online, you see how many billions of dollars are traded every day. What then needs to be done is for regulators or parties. Okay, now, when I say regulators, it's important to know that by the very essence of these cryptocurrencies, it's supposed to avoid regulation. But relevant parties must take cognizance and ensure that there is some kind of policy, systems, and processes in place to take cognizance of what's happening in that space and ensure that people are not the victims of fraudulent events and practices and you know, and are attacked in that regard. We can't continue to ignore cryptocurrency. Actually, it has come to stay with us. Relevant authorities need to take decisive steps in taking proper cognizance, educating people, and putting proper policies and processes in place where required for people who are enthusiastic and utilize it to be able to do so safely. So that would be my comment, but we can't keep on ignoring it. That's not a good strategy at all. It never was.
All right, thank you very much. Ladies and gentlemen, unfortunately, like I said, even though I've seen there that even more questions have been asked on the Q&A platform, but these are the few ones we could take for now. And like I mentioned earlier, a lot of the questions hover around the same themes. So the few questions I've asked have covered quite a bit of the questions that were asked. Some of the points also raised on the Q&A forum were just requests, like a request for the presentation material. I believe the Secretariat will send out the material to all participants. And then there were a few specific requests regarding general information. But whatever it is, I can assure you, ladies and gentlemen, that the Secretariat will look at the items, the requests that were made, and there will be appropriate response to each and every one of them. So let me thank our distinguished panelists for a great job. Well done. I believe that the issues have been properly laid out and intensely discussed. We are hoping that at the end of this session, of course, like the initial guest speakers have said, the communique will be issued out, you know, laying out the key areas of the points that have been raised, lessons learned, recommendations for the future. So thank you very much, our distinguished panelists, and thanks for staying to the end of this very program. Thanks also to everyone who has been participating. So at this point in time, I would like to call on Mr. Chuma Ezirim, who is a member CeBIH Advisory Council, to give us the closing remarks, please. Chuma, please. Thank you.
Okay, thank you very much, David, and thanks everyone that joined us. So I would like to thank CB, you know, especially the ESCO, you know, for inviting, also for organizing this forum, which to me, you know, has been quite educative. Also, you know, our guests and the panelists, you know, for all your contributions, you know, to this very apt topic. I'm sure that my colleagues in banks and other players in the industry who joined this webinar, you know, have found the discussions, you know, very informative. I took some very, you know, few notes, but I know that at the end of this session, you know, the ESCO, you know, will share with us, you know, the key learnings. But just to reiterate, you know, some of the points, you know, that the panelists, you know, made. One is that digitization comes with numerous opportunities, but it also comes with risks that we must have to manage. You know, for those of us that are directly involved in digital payment transformation in our organizations, we are the first line of defense, and therefore we're expected to understand and manage all types of risks that impact our business. As our transaction volumes and value grow, and with the addition of new channels, products and services, our markets would increasingly become attractive to fraudsters within and outside the country. It is therefore our responsibility to liaise with all stakeholders within our organization and in the industry to ensure that we put in place measures to mitigate these exposures. So measures in the areas of infrastructure, structure, and most importantly, people. Lastly, I want to advise that, we should note the key learnings, go back to our organizations and liaise with the relevant stakeholders to reassess our readiness to manage the emerging risks inherent, in this business. Thank you very much once again for attending, and enjoy the rest of the day. Bye.
Thank you very much, Chuma Ezirin. At this point in time, ladies and gentlemen, we've come to the very last item on our agenda for today, which is a vote of thanks by Mr. Oluremi Tinuola Gabriel. So, Oluremi, please, can you give us a vote of thanks? Thank you.
Okay, thank you very much. On behalf of the Advisory Council of CeBIH, the chairman and the executive member, of course, as well as all members of the Committee of E-Business Industry, we want to thank everyone, starting from our special guest, Mr. Albert, the CEO, MD CEO for Access, who also doubles as the chairman of Committee of Bank CEOs. Of course, our lead speaker today, what we say is one of us, that's Mr. Musa Jimo, the Director, Payment System Management at the Central Bank of Nigeria. Of course, our keynote speaker, Nancy, all the way from Kenya. Our very esteemed panelists who have been quite explicit in attacking and, of course, shedding light on all the issues. Our Advisory Council member that came with their words of encouragement, and support at this time. And of course, the hundreds of people, attendees that joined this webinar, amazing webinar. Want to sincerely appreciate your coming. And of course, we look forward to seeing you again as we share more industry. We appreciate you. Thank you.
Okay. Thank you very much, Oluremi, for the vote of thanks. And once again, ladies and gentlemen, I would like to thank everyone who has been able to attend today's event. It's an epoch-making event from the very beginning to the end. Some of you can see me. What I'm trying to do is to take a picture of all our panelists at the same time, although I can't see one person. Chuma Ezirin. Chuma Ezirin, please leave your video camera on. Thank you very much. I like to do this when I moderate at any event. Thank you. At this point in time, I think we'll just hear from Ms. Adeyemi Atanda to close the entire session. Adeyemi, please.
Okay, thank you very much, David. It's been a fantastic work you've done here. And thanking all our panelists and our special guests also. There's nothing left to be said except that our job is cut out for us very clearly. We are in a race to make sure that we keep growing the volume and value in a very responsible way so that customers' confidence is also instilled in the industry. And that's our commitment. That is what we'll keep doing. From time to time, we keep calling on all the stakeholders in the industry, some of whom are on this call with us, so that we can be able to work together and achieve this. Thank you very much, everybody, for the time. Thank you for the insights that have been shared. Really appreciate this. We look forward to meeting again at the next possible opportunity. Thank you, and do enjoy the rest of your afternoon. Thank you.
Thank you. Thank you, everyone. Thank you. Excellent work. Thank you very much, everyone. Thank you, and have a wonderful day.
Thank you.
Bye.
Okay. Yeah.